It's Friday. Welcome to Tesla Shorts Time Daily, episode 417. I'm Patrick in Vancouver. Today is March 27th, 2026. Let's see how Tesla is heading into the weekend. You know, it's interesting how the narrative around Tesla sometimes swings between wild optimism and deep skepticism. This week, Fortune gave the company a nice vote of confidence by naming it one of America's most innovative companies for 2026. The publication specifically pointed to the Cybercab as the standout reason for the recognition. That feels timely because Tesla is now officially kicking off production of the autonomous vehicle this year. For the business, this kind of external validation helps reinforce Tesla's position as the leader in the robo-taxi space, while many traditional automakers and tech players are still stuck in prolonged pilot phases or scaling struggles. It's a reminder that innovation in this area isn't just about flashy prototypes at events. It's about the hard work of moving toward actual manufacturing scale, solving the regulatory puzzles, and proving the economics can work in the real world. I think it also quietly signals to investors that Tesla's big bets on autonomy aren't just visionary talk. They're starting to translate into tangible progress that even a mainstream business publication like Fortune feels compelled to acknowledge. From that external validation, let's move over to the hard numbers Wall Street is watching right now. Analysts are expecting roughly 365,000 vehicle deliveries for the first quarter. That figure would represent a quarter-over-quarter decline in vehicle deliveries, which is something we haven't seen Tesla deal with often in recent years. At the same time, the consensus points to continued strong growth in energy storage deployments, which many see as the bright spot. According to Drive Tesla, this split gives an early read on where investor focus lies ahead of the official report. The contrast between the two sides of the business is telling. It shows how Tesla has genuinely diversified beyond just selling cars. Wall Street seems increasingly willing to look past a softer vehicle quarter if the energy side keeps accelerating at the pace we've been seeing. That balance between vehicles and energy is going to be fascinating to watch when the final numbers drop. A temporary dip in auto deliveries might sting in the headlines, but if the energy business is firing on all cylinders, it could underscore how Tesla is evolving from an electric vehicle company into something broader. Still, it's a delicate moment. Sustained declines in vehicle sales would raise questions about demand, pricing strategy, and competition, so the energy growth is carrying a lot of weight right now. While those delivery numbers tend to grab the headlines, Tesla's European manufacturing base is dealing with some fresh labor friction that's worth paying attention to. Germany's largest union, IG Metall, is legally challenging the recent Works Council vote at Gigafactory Berlin. This move escalates the ongoing tensions between Tesla management and organized labor in the region. According to Drive Tesla, the dispute matters for the smooth operation of Tesla's European manufacturing footprint going forward. Maintaining stable relations with the local workforce has been an ongoing challenge ever since the factory opened. Tesla has always preferred direct communication with employees rather than working through traditional union structures, which has created friction in a country where works councils and union involvement are deeply embedded in the culture. Legal challenges like this can create distractions, slow momentum, and add uncertainty even if production itself keeps rolling. It's an area that will require careful attention as the company tries to scale up further in Europe. I think it's one of those situations where Tesla's unconventional approach to labor relations, which has worked well in the US and China, runs into a very different set of expectations in Germany. How this gets resolved could influence not just Berlin, but future expansion decisions across the continent. On a brighter note, one high-profile would-be competitor just stepped off the field entirely. The Sony-Honda joint venture has officially discontinued development of its Afeela luxury EV sedan and the planned SUV that was supposed to follow it. The project was once seen as a serious contender in the premium segment, bringing together Sony's tech pedigree with Honda's manufacturing experience. According to Teslarati, this removes a notable name from the luxury EV race. It may ease some competitive pressure on Tesla in that part of the market, at least in the near term. The decision to shelve the vehicles shows just how difficult it is to bring a new premium EV to market successfully, especially when you're trying to take on established players who already have scale, brand recognition, and service networks. For Tesla, it means one less rival chasing the same high-end customers who might otherwise have been tempted by something with a fresh, tech-focused brand story. That kind of attrition in the competitive landscape is worth noting, even if it doesn't change Tesla's own product plans. It's another data point in the broader story of how expensive and risky it is to launch new electric vehicles right now, particularly in the higher price brackets where volumes are smaller and expectations are higher. While the premium sedan space sees one less rival, Tesla continues pushing the technology edge on its upcoming cars. A newly published patent details Tesla's advanced steer-by-wire system. The technology promises improved steering precision through much deeper integration between hardware and software. It's expected to appear in the next-generation Roadster, which is due for unveiling next month. According to Drive Tesla, this represents another step in refining vehicle dynamics in ways that go well beyond what most drivers consciously think about. Steer-by-wire removes the traditional mechanical linkage between the steering wheel and the wheels, which can allow for more precise control, variable steering ratios, and even features that would be impossible with conventional setups. The patent shows Tesla continuing to invest in foundational changes that most drivers will never consciously notice day to day. Those invisible improvements often end up mattering most for long-term product quality, performance, and the kinds of advanced driving features the company wants to offer down the road. I find this stuff quietly impressive because it speaks to Tesla's willingness to rethink basic vehicle architecture rather than just layering new software on top of old mechanical designs. If they get it right, it could set a new standard for how responsive and customizable cars can feel. From the high-performance side of the lineup, let's turn to the infrastructure that keeps the whole fleet moving. Tesla has introduced a new prefabricated folding unit design for its supercharger stations. The design uses a hinged base that dramatically speeds up installation compared to previous generations. According to Drive Tesla, it should reduce costs while also allowing more stalls per site in certain locations. Inside EVs reports the new units can cut deployment time roughly in half compared to earlier versions. This matters because faster, cheaper deployment directly supports quicker global expansion of the charging network at a time when demand keeps growing. The hinged base makes the whole station easier to transport and set up on site, which should help in both urban and more remote locations. It's a practical engineering improvement that could compound over time as Tesla scales the network aggressively. These kinds of incremental but meaningful optimizations are easy to overlook, but they often determine who wins in infrastructure-heavy businesses. That supercharger news actually ties into a bigger strategic question worth stepping back for. What actually determines whether the supercharger network becomes a durable competitive advantage or just expensive overhead? Opening the network to non-Tesla EVs has improved utilization faster than many expected. It's shifting the network from a pure cost center towards something closer to a revenue stream. The new folding units cut installation time roughly in half and lower costs at the same time that open access boosts daily sessions per stall by serving more brands. Tesla's approach seems to be standardizing hardware, driving down costs, and using software plus real-world data to iterate faster than competitors. A well-run, cost-efficient charging network can generate margin while reinforcing the entire ecosystem, but only if deployment costs stay low and utilization stays high. I think we're still in the early chapters of figuring out exactly how profitable this can become, but the combination of hardware innovation and network openness feels like the right direction. It's one of those areas where Tesla has a genuine head start, but execution over the next few years will decide whether that lead turns into a lasting moat. Staying on the robo-taxi theme, one design choice that raised eyebrows when it was first shown is starting to look pretty smart. The Verge took a thoughtful look at Tesla's decision to make the Cybercab a two-seater. The design initially drew skepticism from people who assumed taxis need 4 or 5 seats to be practical. The article argues the choice aligns closely with cost, utilization rates, and operational efficiency in a high-volume robo-taxi fleet. It offers a solid counter to the instinctive reaction many had when the vehicle was revealed. In a high-utilization fleet, every extra seat adds weight, cost, and complexity without necessarily improving revenue per trip in many urban scenarios. Optimizing for 2 passengers may actually improve economics, turnaround times between rides, and overall energy efficiency. It's one of those product decisions that looks simpler than it actually is once you run the numbers on fleet operations. I appreciate when publications take the time to dig into these choices rather than just reacting to the visuals. It shows how Tesla is thinking like a transportation-as-a-service company rather than a traditional car maker. While Tesla prepares its own robo-taxi rollout, the race is already heating up in Europe. Rimax Verne subsidiary is partnering with Uber and Pony.ai, They plan to launch Europe's first commercial robo-taxi service in Croatia this year. The service will be accessible through the Uber app, which should help with adoption. According to Inside EVs, this marks an early step in commercial robo-taxi operations in Europe. It shows how quickly the space is moving internationally, even outside of the usual North American and Chinese hotspots. For Tesla, the development underscores that the competitive timeline is compressing. Being first to scale in multiple markets will matter a great deal because network effects and data advantages tend to compound quickly once services are live. Croatia might seem like a small market, but it's a meaningful proof point that could build confidence for larger European rollouts. It's a reminder that Tesla won't have the luxury of moving at its own pace. The world is moving, and the pressure to deliver on timelines is only increasing. Now, one thing worth watching more sauce. Osli is the labor situation we touched on earlier in Germany. IG Metall has taken Tesla to court to challenge the results of the recent Works Council election at Gigafactory Berlin. The dispute adds to the ongoing labor management friction in the region. It could affect how Tesla operates its European manufacturing base going forward if it drags on. While the company has successfully scaled production there, maintaining stable relations remains an area needing careful attention. Tesla prefers direct communication with its workforce rather than traditional union channels, which continues to create cultural and legal friction in Germany. Legal challenges create distractions that can slow momentum even when output continues. This is a legitimate operational risk that Tesla will need to manage thoughtfully without losing focus on production goals. I don't think it's an existential threat, but it is the kind of recurring issue that can drain management time and energy. How it's handled could influence Tesla's appetite for further investment in the region. Shifting to a few items that caught attention across X this week. Grace Tao, vice president of Tesla China, emphasized that vehicle reliability and safety remain absolute priorities regardless of cost. Quality teams regularly tear down selected bodies in white to inspect welds, adhesive bonds, and corrosion resistance. The Model Y, for example, has nearly 3,000 weld points and over 400 adhesive segments. This focus on invisible details helps build long-term customer trust and product durability. It's reassuring to hear senior leaders in China stressing these fundamentals publicly. In a business that moves as fast as Tesla, it's easy to worry about corners being cut, but this suggests the opposite approach is being taken. That kind of visible commitment from leadership on quality can go a long way toward keeping customers confident even as the company pushes hard on new technology. Elon Musk also dropped a hint about Tesla's next vehicle as the Roadster unveiling approaches. The comment has sparked speculation about whether the focus is squarely on the Roadster or possibly the Robovan as well. It keeps attention on Tesla's expanding product pipeline beyond the current lineup. With the Roadster due next month, the timing feels intentional. These small public hints often serve to keep the broader community engaged while development continues behind the scenes. It's a classic Tesla communication style, a little bit of mystery mixed with genuine anticipation. Before we go, keep an eye on how the labor situation in Germany develops and whether any early resolution emerges ahead of further production ramps in Europe. It could set the tone for how smoothly Tesla can grow its manufacturing presence there. That's your Tesla news for today. TSLA closed at $372.11, down $2.09, 0.6%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow. This podcast is curated by Patrick, but generated using AI voice synthesis of my voice using ElevenLabs. The primary reason to do this is I unfortunately don't have the time to be consistent with generating all the content and wanted to focus on creating consistent and regular episodes for all the themes that I enjoy, and I hope others do as well.